UK interest rates have gone through the roof. What could be the ramifications of this? So in this video, I'm going to talk about UK interest rates going up by 0.75% and what the ramifications could be for that. Now, before doing that, go over to adamfayed.com, especially if you're an expat or high net worth individual, and see how I can help you, and indeed other people that I've helped before, hear about what they have to say on my website. Now, the Bank of England Governor Bailey has announced that UK interest rates will go up by 0.75%. He also expects them to go up further. Interestingly, however, he also said that he thinks the market is pricing in too high interest rates. In other words, the final interest rate peak will not be as high as many people in the market now expect. Now, I've been saying that for quite some time, and I've been thinking that for quite some time. Now, what are going to be some of the short and medium term ramifications? Short term, it might be difficult for households and businesses, especially those who have got a lot of debts. It could push household budgets to breaking point if they're too leveraged. It could also be a bad time for UK property prices, at least for 3 to 6, 9 months or whatever. I don't think long-term investors should care about that, but in the short term, obviously, there's a big risk. However, what I do think is the case is this. The chance that the central banks will have to pivot next year, I think, is huge. I was reading a very interesting document online from the Cato Institute. They're a conservatively minded think tank, and you would think that they would be saying, oh, we need to increase interest rates, we need to go as far as possible, like Volcker did in the 80s and so on and so forth. But interestingly, what the Cato Institute pointed out in the article is in the last 3 months in the United States, in many regards, we've actually seen deflation or 0% inflation. That sounds incredible. I know some people are going to watch this and say, oh, I live in America, I've seen prices go up or whatever. But if you think about it, even in the UK, and I don't live in the UK, but even the UK, which has higher inflation than the US, if you think about it, inflation for many goods peaked 2 to 3, 4, 5 months ago. Now, take a few examples. Take housing. The media will say, oh, housing has gone up 7.7% year on year. But what does that mean? That means the price of houses is now 7.7% higher than November 2021. However, late last year and early this year, the pace of house price inflation was huge. But last month, according to the Nationwide Building Society, the prices went down. 2 months ago, it was 0.2%. So if in November, UK house prices are stagnant or go down again, UK house prices would have been in deflation for a whole quarter. And there's many other examples of this. Petrol prices. Now, I agree many motorists are ripped off in the UK and across Europe, but if you look at the petrol prices, yes, they're higher than this time last year, but they've gone down compared to the peak 3 or 4 months ago. So there's a good chance that this time next year, or even the middle of next year, we could actually see deflation. And another reason for that is that essentially, if you think about it, this time next year, or let's say even June next year, what's going to be the comparison? It's going to be from June this year, when prices were going through the roof because of the Russia-Ukraine situation and many other things. So I do think the central banks are going to have to pivot sooner or later on this, because also the economy in many countries just can't take 3 or certainly 4, 5.5% interest rates, maybe 3 at most, but I don't think the economy is going to be able to survive that. And a lot of the inflation has been baked in anyway because of the sanctions against Russia, the Russia-Ukraine crisis more generally, and also the stimulus after COVID and all the things that have gone into inflation, the supply chain breakdowns, during COVID and all those kind of things. So I personally think, nobody knows, but I think the central banks are going to have to pivot. And I think it's going to be very easy for them to pivot if inflation dramatically falls, which I think there's a decent chance it could fall. I know Elon Musk, Cathie Wood and others feel like there could even be deflation within a year or two. And I'm not saying it's guaranteed, but I think lower inflation, even 0% or deflation is quite likely sooner than people expect. Yes, there are certain risks. For example, as inflation has gone up, people have expected more in terms of wages. If they get more in terms of wages, they're more likely to pay for the higher prices, which might bake in the higher prices. But as I mentioned, in the last 3 months, there's been no sign of that really happening, because even though people have got pay rises, Many of the goods and services are more expensive than this time last year, but they've actually fallen compared to 3 months ago. So I think the medium-term ramifications of this is going to be the central banks are going to have to pivot. I don't know when that's going to happen, but I suspect when it does happen, any kind of risk-related asset, technology, stocks, the Nasdaq and so on, are probably going to skyrocket. We can't know for sure, but that's what I suspect, because right now you've got a situation where the Dow Jones is at about 31, 32,000 when I'm speaking, but the Nasdaq has fallen a lot. So you've got a situation where the more risky elements of the stock market are vastly underperforming the traditional areas of the stock market like oil and gas and financial firms and so on and so forth. I personally don't think that's going to last forever.
Depends on every person's individual goals, how much money they want to invest, how long they want to invest. And I did not have at all the feeling from any bank with which I had contact with that they were interested in these things. Whereas with you, it was from the very beginning obvious to me that you had experience in these matters and also were interested in what I wanted to achieve. Anyways, I'm very, very pleased and positive to say that I believe I've picked the right one. The results in the last couple of years have overreached my expectations by far. And I see no reason why it should not continue. Of course, I can highly recommend him as your financial advisor for now and for the future, because hesitating is missing out.
So I'm investing a lot in the Middle East market, but the amount of returns I'm getting from there is very low as per the amount of returns I'm getting from the investment portfolio which you made for me. Obviously, the best result in market right now is Adam.